and it's gone, just like home buying demand. Just kidding. But there is a lot of changes happening right now in our US housing market, including my lack of a beard. So here's a new report from Redfin just announced on June 13th. I'm going to talk about their latest trends they're sharing because they have an update regarding pending home sales, home prices, much more. But also they talk about mortgage rates as well, because as of late, rates have been coming down due to slowing down of inflation based on a report yesterday, which was on Wednesday, and also today, which is on Thursday, June 13th. So let's go and dive right in. It says daily average mortgage rates dropped to their lowest level in 3 months. Technically, it's 2.5 months. In any case, though, rates did decrease quite a bit yesterday and decrease further today on Thursday. This is after May's CPI report, or the Consumer Price Index. This is an inflation reading the Fed closely watches regarding inflation that consumers in the United States are paying. But on Thursday, the PPI, or the Producer Price Index, was released as well, what producers are paying, a key measure of inflation on the producer side. In any case, rates did decrease after May's CPI report showed that inflation is continuing to cool down. That could bring back some demand, but for now, home sales are still decreasing. Meanwhile, the median U.S. home sold price hit a new all-time record high at $394,000 during the 4 weeks ended June 9th. That's up 4.4% from 12 months ago, the biggest increase in about 3 months. However, there are signs that home price growth could ease though. We're seeing asking prices kind of slowing down as well. We're seeing the share of price reductions also increase to 6.5%. That's actually very close to the peak that was set back in November of 2022. So it's pretty wild that we're basically in early June right now. And the share price drops is more or less in line with what we saw back in the winter months of 2022, because the share price drops tend to peak in the winter months and not during this peak of the home buying season. And as the Redfin notes right there at 6.5%, that's the highest share since November of 2022. Prices are already decreasing in 4 US regions as well. Also, according to Redfin, mortgage rates are likely to decrease further over the summer months, which would keep monthly housing costs from spiraling up again. Daily average mortgage rates dropped to the lowest levels in 3 months, technically 2.5 months, on June 12th after the latest CPI report was announced. And although the Fed forecast for just one interest rate cut this year during their meeting, which was on Wednesday, it's possible the Fed wasn't able to fully consider the fresh inflation data in time for their meeting. So to give you some context here, on Wednesday, which was yesterday, the CPI report was announced, but also the Fed announced their stance on rates. So they kept the federal funds rate flat, unchanged compared to the previous meeting. So what basically Redfin is saying here is that their forecast as well regarding future rate cuts by the Fed. Again, they announced they're going to have one rate cut potentially later this year, potentially in September and maybe in November. But that announcement was just hours later after the CPI report was announced, showing that inflation was winding down further or more so than was expected. So according to Redfin, the Fed may revise the projection at their next meeting based on this incoming data. Now, speaking of that, let's look at that. I made a video about this, so I'll very briefly touch on that. So core CPI, that excludes volatile food and energy costs, came in a gain of 0.2%, below the expectations, and also the year-over-year change, a gain of 3.4%, also below the previous month's reading and also below the forecast as well. Also, headline inflation was flat month to month and also a small gain of 3.3% year over year, all below the forecast. On top of that, core CPI year over year, a gain of 3.4%. That's actually the lowest reading since April of 2021. This is one of the main reasons why rates decreased so much on Wednesday. Looking at today's reports, look at this. PPI, or core PPI, that excludes volatile food and energy costs, was flat compared to the previous month. Also, a small gain of 2.3% year over year. Also, well below expectations and also below levels compared to the previous month. On the other end of the coin, though, look at jobless claims. Continuing jobless claims, 1,820,000, higher than the forecast and also higher compared to the previous reading, which was last week. Initial jobless claims, 242,000, much higher compared to the forecast at 225,000. I mentioned this reports because what happens in our economy affects mortgage rates, and of course, it affects our housing market as well. So looking at this initial jobless claims, here is our good Uncle Fred, 242,000. This is a 1-year chart, by the way. 242,000 is actually the highest levels we've had going back to mid-August of 2023 at 248,000. Just taking a step back here, the labor market is something we should definitely track in the weeks and months ahead because we have all these challenges right now regarding record high credit card balances, delinquencies on credit cards increasing as well. We also have unemployment at 4%. So the labor market is definitely, or I should not say definitely, but it's something we should definitely track because that could impact our housing market. If people start losing their jobs left and right, that's obviously going to impact our economy and real estate in general as well. Going back to Redfin's report, according to their economic research lead, she stated the following regarding what happens if rates were to decrease, because that's what we are seeing right now. If lower rates bring more demand than supply, that could push prices up even further. Lower rates and higher home prices may ultimately cancel each other out when it comes to home buyers' monthly payments. So if you guys are waiting for rates to decrease, now I've been talking about this for quite some time, right? If rates were to decrease, what do you guys think is going to happen? Demand should increase as well, as long as we don't see major cracks in our labor market. So if unemployment spikes, of course, that's going to be a different scenario. But if unemployment does not spike and rates decrease, that's going to cause home buying demand to increase, which again puts upward pressure on home prices. And that's exactly why I'm always telling you guys, buy what's right for you rather than trying to time the market, because timing the market is a losing battle, to say the least. There's so many things that impact our housing market that are completely beyond our control whatsoever. How many people are going to list their house for sale? How many people are going to lose their jobs? The direction of rates, inventory, et cetera, et cetera. So just buy what's right for you. Have long-term time horizons. If you guys find a great house and you are not overextending yourself, why buy a house right now? Go ahead and buy a house. I'm not pushing you guys to buy a house, but I'm just saying if everything aligns, I would say there's no reason why not to buy right now. But it's a personal decision. It's a big one. So make sure you make an appropriate one, do your math and do your research. In any case, let's move on. Let's talk about mortgage rates. So this is according to the Mortgage News Daily. They basically survey lenders across the country and ask them, hey, what's your rate for someone looking to buy their primary residence? They have a FICO score of 780, putting 25% down. These are average rates on a national level, not my rates. I am a licensed mortgage advisor. But here's what the Mortgage News Daily has to say. As of Thursday, for a 30-year fix, 6.97%, jumbo 7.22%, FHA and VA loans is around 6.45%. 1 year ago, for a 30-year fix, we were at 6.98%, so virtually flat from 12 months ago. In addition, looking at the chart above, at 6.98%, that's actually the lowest rates we've had going back to March 28th this year. So basically a 2.5-month low regarding rates right now. Let's get back to Redfin's report and talk about some leading indications of home buying demand. This is something I touched on in a previous video regarding application numbers for people looking to buy a house. That increased by 9% compared to 1 week ago, but still down 12% year over year. There was a decrease, or has been a decrease in rates for about a week or so. And that actually caused application numbers, these are, by the way, are seasonally adjusted, to increase last week. Meanwhile, Redfin's Home Buyer Demand Index, which is also seasonally adjusted, is down 2% from 1 month ago and down a whopping 18% year over year. Touring activity, this is according to showingtime.com, is up 28% compared to the start of this year. At this time last year, it was up by only 22%. Google searches are down 16% according to Redfin, and this is according to Google Trends. Okay, let's talk about some trends we're seeing right now regarding home prices, inventory levels, new listings, etc. So Redfin basically tracks 400 plus US metros. Their data, or I should say their weekly data, goes back to 2015, and the data is subject to revision. So the stats we're sharing in today's video may get revised next week. This covers the 4 weeks ended June 9th this year. So regarding the national median sale price, this means that half of the houses that sold during this time frame sold for above, and half of the houses that sold below this number. Nearly 394,000, up by 4.4% year over year. That is a new all-time record high, the biggest increase in about 3 months, tied with the increase during the 4 weeks ended April 21st. They're talking about the biggest year-over-year increase at 4.4%. Asking prices increased by 6%, and your median monthly mortgage payment rose by 8.6% to $2,829 per month. That's only $30 per month below the all-time record high that was set back during the 4 weeks ended April 28th. Now, before I share the metros in which home prices have increased the most and also the metros in which home prices have decreased the most, there's 4 metros that have went down from a year ago. Much of those are actually in Texas. So average monthly housing payments, again, $2,829. That is below the peak that was set back about 1 month ago. And they're looking at a weekly rate at 6.99%. They basically look at the weekly rate according to Freddie Mac last week. That was the weekly rate 1 week ago. This is absolutely mind-blowing. I talk on the channel quite a bit about a lack of housing affordability, and this is a perfect example of that. $2,829 per month. Look at 2021. Keep in mind, this is when home prices had already increased so much compared to 2020 and 2019. I really wish they could just squeeze in 2019 right here in all these charts, because it'll be a good indication how the trends we're seeing today compared to pre-pandemic level. Anyways, back in the same week of 2021, the average monthly housing payment was just over $1,600 per month. Now it's over $2,800 to buy a median price home today compared to the same week of 2021. And this, my friends, is one of the main reasons why we're seeing a lack of home sales across the United States due to the increase of home prices and mortgage rates as well. Now, speaking of home prices, let's take a look at the metros that experienced the biggest increases year over year. So they basically look at the 50 most populous metros. So 46 of those increased compared to 1 month ago. The biggest winner here is Anaheim, California, leading the nation once again, up by a whopping 16.8%. And that is absolutely wild, because your median price there, or average price home there, which is in the greater Los Angeles area, is about $1 million, maybe just a little bit over that, $1 million. So an increase of 17% is not an increase of a $300,000 home, it's a $1 million house. Anyway, it's crazy. Newark, New Jersey is in the second spot here at a gain of 6.4, very close to Anaheim. Then we have New Brunswick, New Jersey, Nassau County, New York, up by nearly 15%, and then San Jose, California, up by 13%, all over in double digits. In contrast, the areas which prices decreased the most were Austin, Texas, down by 3.5%. I made a video, 2 or 3 weeks ago, how the housing market in Austin, Texas was going to experience some big trouble. And here we go, prices down 3.5%. Then we have Fort Worth, Texas, down by 2.5, San Antonio down by 1.1, and then Portland, Oregon, down by nearly 1%. All right, changing gears slightly here, let's talk about pending home sales, a measure of contracts being signed between buyers and sellers. You write an offer on a house, you get your offer accepted. That is a pending home sale. Congratulations. New listings, which is a measure of people listing their houses for sale on the supply side, and also active listings, which is housing inventory. So pending sales decreased by 3.5%, the biggest decline in over 3 months. In contrast, new listings increased by nearly 8%. This is a common scenario we've been seeing for about a month or so, where contracts being signed going down, yet new listings going up, in imbalance between supply and demand. Active listings increased by 16.7%. That's actually one of the biggest increases year over year we've had in quite some time. I believe last week's number was a gain of about 15%. Also, the month supply is still relatively low at 3.2 months. That's a gain of 0.6 percentage points from 1 year ago. All right, let's have a look at Redfin's data center regarding those figures. So new listings did see a small uptick after seeing 2 consecutive weeks of declines. So new listings increased by 7.8%. Last week, they were up by 6.9%. And by the way, the blue line is 2023, the black line, 22, and the orange line is 2021. So the number of new listings is still well below 21 and 22, but still above 23. We're also on a national level, still way below pre-COVID levels as well. So new listings increased by nearly 8%, yet on the demand side, it decreased by 3.5%. Small decrease compared to the previous month or previous week, down by 3.3%. Also, this is at least a 3-year low during the same time frame as well. In regards to active listings or housing supply, that increased by nearly 17%. Sorry, actually 1 week ago it was at 17.5%. I misspoke earlier. In any case, still a big increase and also at least a 3-year high. Kind of funny here that 21 through 2023, they basically had the same level of houses for sale, but thereafter, drastically different. Also kind of interesting to see here that, let me just kind of get rid of the last couple of years, 21, 22. So over the past couple of weeks, active listings have been kind of leveling off, which is much different compared to the huge run up that we saw basically in February through the end of May. And this, of course, is an early sign of home buying demand. And of course, you want which direction we're headed. If inventory starts going straight up, of course, that's going to be a recipe for disaster. But if inventory kind of does this, then of course, they'll support home prices in the coming months as well. Let's also take a look at how each of the 50 most populous metros fared regarding pending sales and new listings. So pending sales increased the most in San Jose, California, leading the nation by far, up by 12.2%. After that, we have Columbus, Ohio, up by 5.8%. Pittsburgh, Milwaukee, and then Seattle up by 3.6%. In contrast, look at that. Houston, Texas, down 16.2%. The biggest year-over-year decrease for these 50 biggest cities. Then we have West Palm Beach, Florida, down by 13%. Fort Lauderdale, Florida, down by 11%. Atlanta, 10%. Tampa, Florida, down by 9.9%. So there's only 13 metros in which pending home sales increased compared to 12 months ago. In regards to new listings surged by 40% in San Jose, California, whereas pending sales only increased by 12.2%. So kind of this imbalance in demand versus supply in San Jose. But again, leading the nation by far in contracts being signed though. New listings increased the most again in San Jose. Then we have Phoenix, San Diego, Miami, and then Denver, Colorado. In contrast, the biggest declines, there's actually 7 metros that decrease. So that means that 43 of the 50 biggest metros have more new listings now compared to 1 year ago. So the biggest decrease, Atlanta, Georgia, down by 7.9, Chicago, Newark, New Jersey, Indianapolis, and Minneapolis, Minnesota, down by 2.1%. Let's take a look at some more charts. Let's look at the month supply, 3.2 months. It's basically been flat for about a month or so. Not a lot of movement regarding the month supply. a small uptick compared to the previous or 2 weeks ago, but flat compared to the previous week. But having said that, we're at least a 3-year low during the same time frame though. In regards to how fast or how slow houses are selling, days in the market, it's at 31 days. So you list your house for sale, and then 31 days later, you get an offer accepted, or you accept an offer from home buyer. That's the median days in the market, 31 days, but this is a 3-year high though. So back in 22, for example, it took about 20 days to sell a house. Now it's at 31 days. 1 year ago, it was at approximately 28 days. It's a little bit higher from 1 year ago. Now, something I mentioned in my video 1 week ago is that days in the market from January through basically April this year, houses on average were selling faster compared to 2023. But over the past month or so, houses are taking longer to sell, which is a sign of a softening housing market. In regards to this as well, so 32% of houses that did sell sold above the seller's final list price. This is at least a 3-year low as well. And just like days in the market, this share was higher in January through basically the end of March compared to last year. But ever since May, that share has been below last year's levels. Again, another sign of a softening housing market. And also we're seeing the share price drops basically skyrocketing right now at 6.5%. The previous peak was set back in November of 2022 when the share was around 6.7%. And here we are in early June, and we're very, very close to the seasonal peak that we saw 2 years ago. Now, one thing I definitely want to point out regarding what's different between this year and 2022, I know it's like comparing apples to oranges, but it's very important to kind of be aware of this. Look at where we were in January. In January this year, the share price drops at 3.5%. In 2022, it was basically at 1.7%. Then by the time we hit the beginning of June, that share surged to over 4%. So the share price drops basically doubled in about 6 months or 5 months. Whereas this year, we started the year off at a higher share. So we're at 3.5%. Now we're at 6.5%. So the share has not doubled year to date so far. Whereas last year, the rate of increases was much greater compared to what we're seeing this year. And this is one of the contributing factors in which why home prices decreased in the second half of 2022. Yet another sign of a softening housing market is this right here, the share of houses selling over the seller's asking price at 99.6%. So this means out of all the houses that sold over the previous 1 month, they sold on average for 0.4 percentage points less than the seller's final list price. Got that right. Anyways, this is below last year's levels. In contrast, January through the end of April, that share was above last year's levels. So houses selling closer to the seller's asking price compared to 2023. But ever since May, that got reversed. Houses selling further from the seller's final list price. And this, by the way, is at least a 3-year low during the same time frame as well. And lastly, let's take a look at Redfin's Home Buyer Demand Index. That decreased by 18% year over year. I mean, by far a 3-year low. This is an index they have, which basically measures the amount of real estate showings and other home buying services that they get from their agents. Easily a 3-year low and basically trending downward ever since April this year. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys want a real estate agent referral, check out my website, which is realestateteamfinder.com. Hope you guys got a lot of value out of today's video. Like and subscribe, and we'll see you in the next video. Have an amazing day.